management and auditor's responsibility on post-balance sheet events. Events after the balance sheet date are those events both favorable and unfavorable that occur between the balance sheet and when the financial statements are authorized for issue. First, auditor should consider the effect of subsequent event on the financial statement and on the auditor's report. Second, management has to establish policies and procedures to identify and account the subsequent events. Auditor is responsible to review the management's procedures to identify subsequent events and perform specific audit procedures designed to identify subsequent events. When the auditor is aware of the subsequent events which are material to the financial statements, they should determine whether they have been properly accounted or disclosed in the financial statements. Impact of events on audit report. The audit procedure for events occurring between the date of the financial statements and the date of the auditor's report is to identify events that may require adjustment of, or disclosure in, the financial statements would be performed as near as practicable to the date of the auditor's report. The auditors should take into account the auditor's risk assessment in determining the nature and extent of such audit procedures, which includes: first, obtain an understanding of any procedures management has established to ensure that subsequent events are identified. Second, inquiry of management and, where appropriate, those charged with governance as to whether any subsequent events have occurred which might affect the financial statements. Third, read minutes, if any, of the meetings, of the entity's owners, management and those charged with governance, that have been held after the date of the financial statements. And fourth, read the entity's latest subsequent interim financial statements, if any. There are 3 periods which can be identified by auditors on subsequent events review, as follow. Period 1, from year-end, during the fieldwork but before signing audit report. Period 2, from signing date to delivery of financial statement. Period 3, after delivery of the report. Period 1, from year-end, during the fieldwork but before signing audit report. Auditors have to perform procedure to discover and evaluate all subsequent events that may have a material effect on the financial statements. That is means that they are able to make necessary adjustment or disclose in the financial statements. Period 2, from signing date to delivery of financial statement. Auditors does not have to perform audit procedures. However, management are responsible to inform auditors of facts may affect the financial statement. Period 3, after delivery of the report. Auditors have not to perform audit procedures. If the auditor becomes aware of a fact which materially affect, the auditor need to consider whether the financial statement need revision. They should discuss with management and take appropriate actions. Key audit matters. Key audit matters are those matters that, in the auditor's professional judgment and most significance in the audit of the financial statements of the current period. The auditor should determine which of the matters communicated with those charged with governance are the key audit matters. In making the determination, auditor should take into account areas of significant auditor attention in performing the audit, including areas identified as significant risks in accordance with standard, areas in which the auditor encountered significant difficulty during the audit, including with respect to obtaining sufficient appropriate audit evidence and circumstances that required significant modification of the auditor's planned approach to the audit, including as a result of the identification of a significant deficiency in internal control. The auditor should document the matters that will be communicated as key audit matters, and the significant professional judgments made in reaching this determination, in accordance with standard. If the auditor determines that there are no key audit matters to communicate in the auditor's report, they should discuss the conclusion with the engagement quality control reviewer, for those engagements where one has been appointed and need to communicate the conclusion with those charged with governance. The professional judgments for the matters determined to be key audit matters are likely to be supported by the documentation of the auditor's communications with those charged with governance.